Hello and welcome to another monthly recap. This is for the month ending today, Friday, October 31st. I hope you all had a wonderful October. Change of the weather, things getting a little chilly, and yeah, happy Halloween. Hope you all had a wonderful month. So here's what we're going to be talking about today: the government shutdown. I mentioned in my last monthly recap that the government shutdown was looming large. I kind of undersold it, as it turns out. Hindsight being 2020, you're never really sure like what's going to happen. Like they can always call like a midnight session of the House and Senate and get things wrapped up with a nice pretty bow, and it can happen very, 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 very quickly. And that surely did not happen. Government went into shutdown on October 1st. Going to talk about that. Where does it rank in the history of government shutdowns? A little bit of context there. Data is drying up, unfortunately, because the government is shut down. We're not receiving nearly as many reports as we normally do. So the markets are a little bit at a standstill. Like the stock market and the bond market are both like kind of flatlining. They're all stuck in neutral a little bit. They're pulling out whatever little bits of data they can, and I'll talk about what little there was to discuss, including the Fed meeting that just wrapped up on Wednesday. But yeah, lack of data is kind of impacting the markets a little bit. Fed did cut rates, as I mentioned, but it's not all treats. There was a little bit of trick in there as well. So we're talking about both the tricks and the treats. And then mortgage rates did end the month around 6.125% for a first-time home buyer making less than 120% of the area median income. Obviously, this month we had Indigenous Peoples Day, Columbus Day. Also, today is Halloween. Hope you all enjoy the holiday. You either love it or you hate it. I find. All right, let's talk about the government shutdown. So, as I mentioned, last update, I mentioned, hey, the government shutdown's looming large. Well, sure enough, it did go into effect on October 1st. It is now the second longest government shutdown on record. Second longest government shutdown on record. And unfortunately, we have number one in our sights. The longest government shutdown on record was 34 days. That was from December 22nd, 2018 through January 24th, 2019. That was also during Trump's first role as president. So second term, now he's got the second longest. And there's a number of senators that have come out and said, yeah, this is going to spill into November, and we're not sure how far it's going to spill into November. So it's entirely possible, even probable at this point, that we pass the longest on record, unfortunately. Other complete shutdowns that have occurred. So there's been a number of government shutdowns, but they usually been partial shutdowns. True complete shutdowns, there's one for 5 days back in 1995, another one for 21 days later that year, spilled into 1996, and then another one for 16 days back in 2013. So full complete government shutdowns are pretty rare, and to be making history, unfortunately, is not a great thing on this front. More on the government shutdown. So it's worth pointing out, okay, last Friday, October 24th, is the first full paycheck that government employees missed, okay, because of the government shutdown. That matters. That matters a lot. First of all, it's going to increase the number of calls, texts, emails that your congressmen and senators are going to be receiving, because there's going to be a lot of people that are upset. They are basically working for free right now, and nobody wants to work for free, especially in some of these government jobs that are, they're not always great paying. They're also a lot of work. You do it as a social service, to your country. But yeah, it doesn't always show up as it maybe should in some ways on the paycheck that you receive. So when they start to miss those checks, like, good grief, do you really want government employees having to get, assistance with food? It's not a great look for anybody. It's going to increase the number of calls and texts and emails that the senators and House get, and that could drive action. We saw the same thing happen in previous government shutdowns, and one of those like kind of trigger points was air traffic controllers, TSA, at airports, because that affects everybody. when flights are getting delayed because they don't have enough people working, when they'll just they'll call in sick. They're not necessarily sick, they just don't want to work for free. Who could blame them, right? Well, that affects everybody. And we're entering the holiday seasons, which means there's going to be an increase in travel for Thanksgiving, for Christmas. So I got to imagine that it's kind of weird, like what really decides action is going to happen, but it could be something as simple as long lines at the airport, delayed flights, canceled flights. That could certainly have an effect on all this. It's kind of weird to think about, but at the end of the day, yeah, don't mess with my convenience. Don't mess with my travel. Pressure will certainly be picking up on Congress and the Senate to come to an agreement. Now, the good news, okay, and there's a little bit of good news here. Yes, things are pretty much at a standstill. There's really not a lot of momentum being built up. But the good news is once momentum does pick up, things are going to happen extremely fast. So fast that you and I and everybody else are going to be wondering, what the heck took so long? Because they will call emergency sessions. They will pull everybody out of their house. They will book private flights. They will get everybody back into town to vote and pass this through. So yes, I know things don't look great. It's a little bit bleak right now. The standstill is not helping anybody. But when the logjam does get cleared, things are going to flow very, 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 very fast. And we're all going to be sitting here wondering, like, wow, if it was so easy, why didn't this happen a month ago? Anyways, so there's some good news there. Let's talk about where is my data? Where is my data? Where's the data? When the government shut down, the vast majority of reporting stopped, grinded to a halt. Employment reports, gone. Inflation reports, gone. Any government reporting has really kind of shut down with very, very few exceptions. Okay. So most of the data that we are getting is from the private sector, private companies, because the government-backed data just does not exist right now. It's really, really frustrating. And it's why the markets have really stood still. If you look at what's going on in the stock market and the bond market, there really hasn't been a lot of activity, a lot of volatility, because there's no data to go on. And they are so data dependent. So let's talk about inflation as a great example, okay? Usually we'd get producer price index, which is inflation as businesses feel it. We didn't get that. Usually we'd get personal consumption expenditures, which is the true measure of inflation from the government's perspective. We didn't get that either, okay? We got only one inflation report this month for September, and it was consumer price index. And the only reason we got that one inflation report is because of COLA, okay? Social Security has to figure out how much they do cost of living adjustments for, and they have to have inflation data to back that up. So they had to go to work just to turn out one inflation report so that they could figure out what the COLA adjustment was going to be on Social Security. If they didn't have that one requirement, they wouldn't have done this at all. So it's pretty frustrating there. But on the one piece of inflation data we got this month for September, the headline came in up 0.3%. The yearly went from 2.9 to 3%. Okay, that was actually in line with expectations. Actually beat expectations very, very slightly. So I colored this red because inflation did heat up. But it's actually good news because it came in kind of right in line with expectations. The core rate, when you remove volatile food and energy from that equation, that came in up 0.2%. Yearly went from 3.1 to 3%. The government wants core consumer price index to reach 2%. We're currently at 3%. So we're still well above their target, but they do know that it's going to take some time. And as I've been talking about time and time again, inflation is heating up or staying kind of flat because the reports we're replacing from a year ago were really, really cool. Once we get into a few months into 2026, we're going to start to replace some really hot reports, and inflation should start to come down. So this is kind of an expected blip on the radar. No real cause for alarm here. Could have colored these both honestly green, or probably maybe this one at least yellow. But regardless, inflation came in right about the target. Is the one piece of inflation data we got. Now let's talk about the Fed meeting. Okay. So there's some good treats and there's some bad tricks, unfortunately. Let's start with the good news. The Fed cut rates by 2.25%. Okay. Everybody knew it was going to happen. Okay. Everybody knew it was going to happen. They kind of built this in the market. Traders definitely did what they called buying on the rumor and then selling on the news. It was a foregone conclusion that a Fed rate cut on Wednesday was going to happen. Traders started buying mortgage-backed securities. Mortgage rates improved in the advance of that meeting. Then, right as we started to get near the meeting itself, and actually the day of the meeting especially, rates started to get worse. And that's when they buy on the rumor and then they sell on the news. And the selling on the news is, hey, the Fed cut rates. That's exactly what happened. Things got even worse, which I'll talk about in a second here. It wasn't just selling on the news. It was selling more than that because of what I'm going to talk about on the next slide. The Fed funds rate is now in a range of 3.75% to 4%. Okay, now the Fed funds rate, that is the rate that lenders exchange money with each other at. Okay, they can borrow money for liquidity reasons from one lender to another from the federal government, and the rate that they're borrowing that money at is 3.75 to 4%. Okay, so the Fed funds rate affects short-term rates. That's key. Short-term rates. Okay, credit cards, short-term rate. Personal loans, short-term rate. Home equity lines of credit, short-term rate. Car loans, short-term rate. Your savings deposit rate. So when you have a savings account, how much interest do you receive at the end of the month? That's also based on the Fed funds rate. Okay, so a little bit of a negative there. You're going to be receiving a little bit less money from your savings account, but it's more good news than bad news because credit cards, car loans, personal loans, HELOCs all dropped by 0.25%. Okay, that'll impact your rates almost immediately on that front. You'll probably get some notifications from your lender. Odds of a rate cut coming into this meeting was over 99%. So again, like a foregone conclusion that they were going to cut rates, and surely enough, they did. Fed followed through with that. Jerome Powell offering us a little bit of a present here. Bad news. Love you, Aaron. All you do is give us one piece of good news followed by a piece of bad news. That's like Disney. For every frown, there's a smile, and vice versa. So, what's the bad news? Well, there's still division within the Fed. Okay, that is a little bit of bad news. Okay, there was two dissenters in this Fed meeting. Stephen Marin wanted a 0.5% cut, so he dissented. He said, "No, I'm not going to vote for a 0.25% cut because I want more." And then Jeffrey Schmidt wanted no cut. Said no cut. They didn't want any cut at all. They dissented because they weren't in favor of a quarter cut. They wanted no cut at all. So the division is a little bit of bad news. Okay, we've been seeing that over the last few meetings. We've had multiple dissenters before, which is a rarity. It is a rarity. The Fed is looking a little bit more divided, politicized. But anyways, a little bit of division there. That's not great news. Now, here's the real bad news. Okay, so Fed cut rates. The markets were pretty content, pretty happy. No big news. And then after that, they have a press conference. Now, this was not a larger meeting where they have a forecast for what they think is going to happen. Okay, they don't put pen to paper and do their dot plot and all that stuff. They only do that several times a year, which you'll see on the next slide. Summary of economic projections is what those meetings are called. This was a smaller meeting, but they do have a press conference after the fact. And in the press conference after the meeting, Jerome Powell struck a hawkish tone. Hawkish means less financially accommodative. Okay, so less in favor of rate cuts. Doves are more financially accommodative. They are more in favor of rate cuts. So the opinion is that Jerome Powell struck a hawkish tone after the meeting. It's because when asked about the December 10th rate cut, he said, it's not a foregone conclusion, which was not good news. But then he doubled down on it and says, far from it. Okay, he's basically saying, look, I know last time the Fed met and they put pen to paper and they show where they think rates are going to go. We were all predicting 2 additional rate cuts by the end of the year, October, December. This time he came out and said, don't count on it. It's not a foregone conclusion. Far from it. The markets got spooked. Okay, bond markets started to go down. Rates jumped up. I say buying on the rumor, selling on the news. Well, it was more than selling on the news. It was selling on some new news, which is really, really bad stuff potentially for Fed rate. Now, he didn't rule it out entirely. Okay, nor would he. Okay, that's not how the Fed does. They don't operate in black and white. They operate in gray. They operate in the margins. But the odds of a December rate cut were above 85% before these comments, and then they plummeted to about 60% after the meeting. Those are constantly shifting, but that's what happened. So again, the markets did not like that feedback from the Fed. They are now wondering if there really is going to be a Fed rate cut in December or not. There's only one meeting left this year. It's on December 10th. It is a larger meeting where they are, again, associate with summary of economic projections. So they don't just make their decision, but then they have to show their work, where they think rates are going to go from here. So it'll be interesting to see what they say at that meeting, whether or not they cut. I still got to think that they probably will, but there's a lot that's going to happen before then. Let's talk about that briefly. So first, the government shutdown has got to come to an end. It has got to come to an end. Federal workers missed out on their first full paycheck last week. They're going to miss out on their next paycheck next week. Again, if you're going to the airport, plan on some delays potentially because TSA are no longer working. They're working, but they're not getting paid right now. They're working for free right now. Like, you know how great that experience is regardless, and now they're working for free. How can you blame them if they're not upset? Make sure that when you pass those security lines, you give them a little bit of love. Thank them. Because that's all they're getting right now is thanks and appreciation. Unfortunately, that doesn't put food on the table. Having done loans for TSA employees before, they also don't get paid great. Like, you're doing a lot of work for very little. So make sure you give them a little bit of love. Air traffic controllers, yeah, that's not great. They are higher paid individuals, but they have an extremely stressful job, and now they're doing it for free. There's a lot of news articles out there about federal employees having to go and go to food banks, go find food elsewhere because they do live oftentimes paycheck to paycheck, and right now they're working for free. So yeah, hopefully that spurs some action. Hopefully things start to come to a quick conclusion, but it's got to come to an end. I I just don't see this spilling into December. The fact that it's already lasted a month is crazy, but we're really only a few days away from being in truly like unprecedented territory with the longest ever. There's a backlog of data, huge backlog of data. We have tons of data that has not been released. The second the government gets shut down, gets resolved, and everybody comes back to work, they're going to start to churn out data left and right. So we're going to have kind of a perfect storm of data. We're going to have tons of data coming into the market, and the market's certainly going to react to all of that. So be prepared. Once the government does shut down, we start to get some more backlog data. Things are going to happen right quick. They're going to have a lot of catch up to do. And then when do the rate cuts begin to show up in the labor market economy? It's only been 0.5%. We got a 0.25% on a couple days ago, 0.25% in September. So we have not seen those effects kind of bleed through into the economy yet, but we certainly will over time. Now, the biggest thing is we got three huge pieces, variables that are impacting things, and we're not sure how they're going to kind of play. Rates coming down. Good news for the economy, but it takes some time, right? You don't really notice a 0.25% drop over 1 month. You notice a 0.25% drop over many months when you start to save that money, when employers start to save that money. Government shutdown, that's got to come to an end. Tariffs, there's been talk about more trade deals starting to come about, but we still have not gotten a lot of actual deals. It's been a lot more frameworks of deals. So rates coming down, that's good news for employers. That's potentially bad news for inflation, but that's good news for the labor market. Government shutdown, that's bad for obviously the labor market, but it's potentially good news for inflation. So that's some good news there. Tariffs, bad news for inflation, bad news for employers. It's all over the map. Like all these different variables impacting things differently. Like how does it actually all play out? Going to be very, very interesting. First things first, got to get the government back up and running and open. So, I think that's it. I hope you all have a wonderful weekend, a wonderful Halloween. Archie and I both say have a great one. And yeah, we'll see you later. Appreciate y'all. Thank you. Bye.